I just wanna be successful. I just wanna be successful.
Hey everybody, my name is Cameron Bennion, this is Young Money Investments, and welcome to episode number 2. So glad you guys are here to tune in again. Gosh, I'm making this very impromptu video right now because of the crazy market correction that we've been having lately. This week has been full of craziness and crazy stuff, so let's get right to it really quick. Here we go. A lot of people that have probably not invested before have probably been thinking, well, what the heck's going on? Well, I don't want to get involved in this if it's pulling back, 5-10%. And I kind of want to go over the positives that are going on with that. So the first thing I want to address with the stock market pullback is these are normal. These happen all the time. Usually once a year is when you will see what's called a correction. A correction is any drop between usually about 5 to 10% and can be all the way up to 20%. Anything larger than a 20% pullback is considered a recession, or a crash essentially. But a 5 to 10% correction is very normal and it's healthy in a market. Dips are normal, and like I said, what's been strange about the economy over the past 3 years is that we haven't really had a dip. January of 2015 was the last time we actually had a dip in the stock market. And so a lot of you new investors that haven't been in the market for very many years are probably going, well, I'm scared, what's going on? I don't want to have my money in the market, I want to pull it out. And those are normal feelings, but those are feelings you need to overcome, and that's what's going to separate you from a normal or average investor and a great investor. As I said in the first video, I've been doing this for about 10 years now. Now, even in that amount of time, I haven't really seen very many pullbacks. Since 2008, 2009, when we had the Great Recession and we had a large pullback, almost 40% in the market, we really haven't had anything happen since then. I got in kind of on the upswing of that, kind of at the bottom, and rode that way up. And so I'm not a great example of kind of how to deal with this, but in doing penny stocks or day trading, as well as going into swing trading, you have to have an air of confidence about you in order to do great, and also in order to consistently make a profit and be able to ride out some of these swings, because sometimes you will want to pull, you'll have a pullback and you'll want to get out of the company right away. And you have to have designated standards in order to, cut your losses, but also not cut them too early where you don't allow the stock to make that correction and continue up, because a good healthy dip, or consolidation as it's called, is normal, and you want to have those things. Something that's really important to remember right now with this correction that's taking place is the market, by all standards, is really healthy. The market and everything currently, job reports are great, unemployment is low. Those company earnings reports that are coming out in Q1 or quarter one that are reporting, they're basically reporting Q4 reports or Q4 earnings. So for Christmas time, November, December, that time, they're all great. They're all beating expectations. And so there isn't really a need to worry, so to speak. I know a lot of people, like I said, are thinking, well, is this going to be the next big crash? It would be very unwise to essentially, think this is a crash and pull all your money out and do that, because all of the logical numbers and everything kind of point that this is just going to be a quick correction, which means it's a great time to buy. Buy is kind of the overall message and the thing that I want to relate to a lot of you. And so that's why I'm filming this video right now. The purpose of this video and the reason that I'm making this kind of out of order right now is because I think it's so important to get in and buy while there's a sale. How many people during Black Friday sales go, oh, you know what, I don't want to go out and I don't want to buy things that are on sale. I'd rather pay full price for that shirt, or full price for that Xbox, or that TV, or that dress, whatever it may be. It's going to be super important to buy while it's on a dip. I've always been a dip buying investor. Now granted, if you're swing trading, you need to look at some of the technical analysis, but this is going to be mainly for a lot of you buy and hold, investors. And that's kind of how I think I want you to start your portfolio off, is buy a few companies that you feel comfortable in and see a 5 to 10 year outlook that's positive. That growth is going to be really important, and that's why I'm making this video. Like I said, make a conscious effort to do your due diligence, obviously, but I think the big steps are going to be step one. If you don't have a Robinhood account already, make one. If you don't know how to make one, message me, comment in the comment section and everything below. If you need help, it's super simple and easy. You can go into the App Store, whether it's Android or iOS, and create a Robinhood account. It's free. You can set up your account and routing number. Those things are super simple and easy to get in there. I just want you to get started right now, because while there is a sale, this isn't going to last for forever. And so it's really important to get in right now and get those discounts, because it's very likely that the economy in the next week, 2 weeks or so, will start to correct. And again, that could be a conservative estimate. Heck, the market could turn around tomorrow, or Monday, pardon me, and we could see a big return. But it's important, like I said, to put some money in on these dips. Again, next week it could always go down. We could always see it to continue to go down over the next week and a half, like I said. But what you do is you average cost in, or what you do is you buy a little, it dips down, you buy a little bit more and a little bit more. Now, it's going to depend on how much money you have, obviously, but let's say you do put most of your money in today, on Monday or Tuesday or Wednesday of this next week, and it continues to go down. Let's say it goes down another 10%. Like I said, we're averaging in, and you're going to, like I said, over the next few months, you're not doing this just right now, you're doing it for the long-term approach. And that's what I want to stress is, if you see red in your account, but you're holding for the next 10 years and you're buying these stocks because you see growth over the next 10 years or 5 years or 3 years, you don't need to worry about the next week or next month or even the next year, because you're going to see a positive overall trend. So that's another thing I want you to keep in mind. So overall, I just want everyone to kind of, like I said, take a look at the market right now and just realize this isn't going to be a long-term thing. My recommendation, like I said, is get into the market now. Get in while there is a discount, get in while there's a sale, because these don't last for forever, just like in department stores and things like that. You're not going to have these kinds of buying opportunities. Warren Buffett always says, buy when people are panicking and sell when people think the market's doing good. I've also taken quite a hit as well, but I'm not worried. And I think that's an important thing that an experienced investor will do, is you can look at it from a positive standpoint. I have a friend recently that he had to buy back his shares that he had sold, delete the app from his phone, and stop looking at it because it was causing him too much stress, anxiety, and stomach aches, literal stomach aches, because he couldn't handle the stress. I know a lot of people are going to probably ask, well, what companies would you recommend buying into right now? The companies that I've pretty much always recommended, at least right now in this year, are going to be Nvidia. Another company that I would also invest or recommend is Apple. Amazon actually has also had a massive sell-off as of recent. So if you're able to get into Amazon, I know they're expensive, $1,400 or I think it's $1,200 now. That's the crazy thing. It was like up around $1,400 a share. You're looking at around $1,200 a share right now, if memory serves me right. A couple others, I guess, that I could recommend long-term are going to be a company called Callaway Golf. That's another big one that I'm going to be making a larger position in. But anyway, guys, like I said, that is essentially the purpose of this video. I wanted to make it kind of semi-short, semi-sweet, and just get this information out there so that you can get into the market, get buying, and we'll talk a little bit more about strategy. I hope I covered everything. This video is super sporadic and it's not nearly as well put together as the first one was. I want to thank you guys for tuning in again. I'm so glad you guys are still here. Video 2, I know a lot of you were probably like just more curious at the beginning of what I was going to talk about. But like I said, I hope I covered everything in this video. If I forgot anything, forgive me. It's very impromptu, very spur of the moment and everything. It's getting late. I think it's like 11 o'clock and we gotta go back and hang out. Freaking 11 o'clock on a Friday night. Thanks so much for tuning in to Young Money Investments. My name is Cameron Bennion, and I hope you guys have a great night, day, whatever time you're watching this video, wherever you're at in the world, friends and family. Love you guys. Thanks so much for watching. Talk to you later. Bye. As I said in the first video that we filmed here, what the fuck was I gonna say? I want you to, if you haven't, create a Robin account. Basically, frick. We could always see a turnaround, right? Not a. Warren Buffett always says, buy when people panic and panic. Sorry. Correction that word. Frick. Holy heck. Gosh. Okay. Okay. Just a sec. Give me, I got a center.
You make me wanna break my